everybody. It's Maureen Lein, your local lender from Rate, and I'm here today, Wednesday, September 17th at 9:40 a.m. with your weekly mortgage update or weekly mortgage minute. So here we are today, September 17th, the highly anticipated day where the Fed is meeting and we are expecting to see an interest rate cut. Now, we're expecting it to be about a quarter basis points, but that's okay. What's important is how the market is going to react afterwards. So the bond market has been pretty calm this morning, just waiting for that Fed's 2 p.m. announcement. And then there's the press conference that's at 2:30. That's when things can really move. Along with the rate cut, we're also going to be getting the Fed's economic projections. And this is going to tell us what they think about future cuts and the overall direction of the economy. Here is the key. If the Fed signals that this is just a one-time cut and they're cautious about the future, the market might not love that. But if they hint at more cuts are ahead, especially by year end, that could be good news for mortgage bonds and for interest rates. Something else to keep an eye on is the Fed's balance sheet. If they even hint at putting more money back into mortgage-backed securities, well, that would help support mortgage rates. And if they dismiss it, well, not as good for us. So now let's talk about adjustable rate mortgages or ARMs. So these are starting to make a comeback, everyone. For the last few years, ARMs made up about 7% of the loans, but right now they're up to about 13%. That's almost double. And why? Well, because as short-term rates come down, ARMs look more attractive compared to the long-term fixed rates. And if the Fed keeps cutting, well, we can see even more borrowers choose ARMs. On the housing side, new home construction slowed in August, with housing starts down 8% and permits down 4%. But builders are looking ahead. Their confidence report yesterday showed that they expect demand to pick up if rates keep easing. Well, and which makes sense, right? Because lower rates usually bring more buyers back into the market. Finally, some good news from the Mortgage Bankers Association. So mortgage applications are picking up. Purchases are up 3% from last week and 20% from last year. Refinances are way up, 58% higher than last week and 70% higher than a year ago. Right now, rates are averaging around 6 1/8, which is helping fuel that activity. So the bottom line for today, guys, rates are trending lower, refinancings are booming, ARMs are becoming a bigger player in the market, and today's Fed meeting is going to be the one to watch. So as always, if you're finding this information to be helpful, please like and subscribe and share. And if you want to discuss a refinance or purchase and just want to discuss interest rates, reach out to me at my cell at 630-660-7760. Have a great day.